Will the Fed hold interest rates and gold rallies to new highs? You're watching CoinDesk Daily. I'm your host, Jen Sanasie. The Federal Reserve is widely expected to hold interest rates steady on Wednesday, but the real fireworks might come from Chair Powell's press conference. With the CME FedWatch tool pricing in a 97% chance of a pause in rate cuts, traders are focused on whether Powell will push back against President Trump's controversial new affordability measures. Trump recently directed the government to buy $200 billion in mortgage bonds to lower rates, a move critics say could reignite inflation. Lastly, Powell might face questions about the DOJ investigation targeting him personally, which he claims to be political vengeance for not slashing rates fast enough. Gold has rallied 80% in the last year as the precious metal surged to an all-time high above $5,000, but Orlean CEO Bjorn Schmidtke warns that most investors are buying a hidden threat. In an interview with CoinDesk, Schmidtke argued that 98% of gold exposure is essentially unallocated IOUs with no specific bar attached. He warns that a seismic event or currency collapse could break the delivery mechanism, leaving ETF holders with nothing but paper while physical prices soar. The firm's solution is to overhaul its treasury to hold XAUT, which is backed by specific allocated bars in Swiss vaults. Schmidtke calls this durable ownership, ensuring that even in a crisis, the deed to the metal remains traceable on chain. And Bitcoin's hash rate fell about 10% during a U.S. winter storm as the natural disaster offers a real-time stress test of the network's mining centralization. Over the past 2 years, the top two mining pools have often controlled more than 50% of Bitcoin's hash rate, while the top six pools have consistently accounted for roughly 80 to 90% of all blocks, leaving much of the network's transaction processing in the hands of a few operators. The crypto market appears unfazed for now as Bitcoin continues to trade below $88,000. However, the incident highlights how the Bitcoin blockchain's growing mining concentration can turn local weather events into system-wide risks. That's it for CoinDesk Daily. Get more updates on CoinDesk.com, and we'll see you next time.